But has the rally gone too far too soon? Let's get our task force. Carmine Grigoli, Chief Investment Strategist over at Mizuho Securities. Adam Bold, founder and CEO of the Mutual Fund Store. Guys, good to see you. Carmine, let me begin with you. Rabini's in the FT saying a double dip's on the way. The Journal says the guys who got the rally correct are now getting a little bit tired. And, of course, Dick Beauvais says we got hundreds more bank failures to come. Naturally, we're at our highs for the year. What's going on there?
I don't think at this particular point that the economy has a major influence on the equity market. There are other factors that are moving prices. I think their liquidity should remain exceptional at almost all-time highs. You've got individual participation. The equity market's increasing. Valuations are favorable. You've turned the corner. You've seen the low on earnings. So I think there are a number of factors here that are very positive and are likely to continue to have this market. Having moved too far too fast is the wrong perspective in this environment. The right perspective, remain invested until interest rates start rising.
Adam, you agree with that? I mean,
a
lot of people are sitting on the sidelines, the individual investor, and they may get in at the same... Go ahead.
Sue, I think that'll be the catalyst for the next move up is, you know, when we went from 6,600 to 75, people didn't believe it. 85, 95, now people are starting, the average investor is starting to go, hey, I think this thing is for real. And as people move back into the market, there's going to be a lot of cash coming in. And, you know, when you've got more demand, prices go higher. And I like the fact that there's skepticism out there. When everybody believes the market's going to go up, that has always been a harbinger of trouble.
Yeah. Everybody's always wrong, right? Adam, but at what point do you get out, right? I mean, at some point, you've got to look at valuations and say, okay, we're pricing in earnings of whatever for 2009 and 2010. At some point, the market gets expensive. At what point?
Well, Marie, we're not there yet. I mean, look,
where would we be there?
We've come from 6,600 to 9,500 on the Dow, but a year ago today we were at 11,950. So we've got a long way to go just to return to some normalcy. I think there's lots more left.
Let's see if Bob Dahl agrees with you. Let's listen into what he had to say a little bit earlier.
We think between here and the end of the year, at some point, we'll get a bump. I don't know what the cause will be. Perhaps it will be that economic growth isn't as strong as we thought, or we're concerned about how it slows down in 2010. But investors will find an excuse, we think, to sell them off before they come on again at the end of the year.
Take that, Carmine. What do we do about that?
Well, you know, anticipating a correction, I guess, has been the wrong move so far. Many investors have moved to the sidelines when the market was up 20, 30%. In fact, when the market was up 20, 30%, I was saying it was going too far too fast. If you look at valuation, which is Michelle's question, typically at interest rates at today's levels, you've historically had valuations in the vicinity of 20 to 25 times earnings. Today, if you base valuation on next year's operating profits, it's around 14 times. This is one of the lowest levels in 20 years. Why is everybody so bearish?
So,
I don't understand it.
Why do you like consumer staples? I would think that would be the last thing that you want to be looking at right now when everybody's talking about an economic expansion and the market moving higher.
Oh, because basically the economic expansion is likely to be very sluggish, and these stocks have not participated as much on the upside, have lagged about 20 percentage points, and I think there is some value there. I tend to pursue value. I am aggressive more with the technology sector, but in the consumer staples area, there is value, and I'm inclined that at some point, maybe Bob Dahl is correct, that there's going to be some concerns about the economic growth not being there as robust. And that's going to help the consumer staples.
All right, guys, with that, on a day where the markets are up yet again, thank you both. Adam, Carmine, we'll talk to you guys later.